too big to fail? Should we allow companies to fail? And are we specifically talking about banking or just companies in general?
Banking. So banking, is the backbone of our economies. And I guess there has to be a little bit of history because a lot of people think this term too big to fail, which is really, it's not really too big to fail. It's maybe too significant or too essential to fail. That term, a lot of people think about it from 2008, but remember, guys, May 20th this year, I turned 50. So I've got a little bit of history on me. I remember when I was born in 1973, I remember as a toddler having to wait in our we had a 1973 Ford Grand Torino. This was like a gas guzzler of a car. And we had to wait in the lines, right, for the fuel. And so in the 70s, especially mid to late 70s, fuel and oil and petroleum investments were going high because they were artificially kind of putting the crimps. This is talking about the Middle East, putting the crimps on the oil. And so oil prices went through the roof and there was rationing and all this crazy stuff happening. And so, what do you think when you're a bank and you've got a whole bunch of depositors' money? You look for a place to put that money so that it would grow. And so there was a bank, and get this, it's going to sound so familiar, but this bank was called Continental Illinois. It was a bank that, started at the turn of the 1900s, and they did mergers, acquisitions, whatever, and they grew to one of the biggest banks in the Midwest. And they decided that they would take a lot of their excess cash and invest it both in the petroleum and in Latin American countries in the late 70s because petroleum looked like it was never going to come down. And then I also remember when I was about 7 or 8 years old that there was then a huge flood of petroleum on the markets. And I remember gas went down to like 75 cents a gallon. It had been my whole childhood. It was over $1 something a gallon ever since the gas crisis. And then in the early 80s, there was a flood of petroleum. And guess what? All of a sudden, these investments that the banks thought were too good to be true and could never fail and were always going to pay above average results, all that money disappeared. And so this bank, Continental Illinois, became insolvent really quick. And then depositors got worried about it. Does this sound familiar? And they started to take their money out of that bank. And guess what happened? The federal government came in, the Federal Reserve came in, and they negotiated all the other banks loaning this bank money to keep it solvent, and then ultimately the FDIC came in and took it over and injected. I mean, we're talking about billions back then, and billions back then were worth a lot more than billions now. And this bank basically was rescued, and all the depositors' money, even though who is attracted to investing with these banks? I mean, think about it. Think about Silicon Valley Bank. This is a similar story. Signet Bank. You might have gotten some of these things in the mail. They promised results much better than what your Chase, what your Wells Fargo, what your PNC Bank was promising for returns, and they woo investors because they're kind of investing into more speculative things and they're wooing investors with like a savings rate that's maybe 2 points higher than the bigger banks. And so people get wooed into using these banks. And as Sip and I pointed out a couple weeks ago, we have mobile apps now. And when we're no longer excited about something, we can move our money in like the touch of a couple of fingers on our mobile device. And so it's really easy now, especially even more than in 1984, when Continental Illinois went insolvent. It's even easier to make a bank go insolvent now. You can just move your money. But it's just so interesting that history keeps repeating itself. It was back then in 1984, if you look through some of the transcripts, that there was some legislators in the U.S. government who coined the phrase too big to fail, TBTF. And that's where that phrase came from. And in all honesty, you can actually go even further back in time, and it keeps repeating. I mean, there's history books all the way back to the medieval ages, right? Because there's been trade going on forever. But even back to the 1300s, there were banks that the people had to go and bail out. So it keeps happening and it keeps happening. And the question is should you just let these banks that get into speculative investments with depositors' monies, should you just let it fail?